Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sushant Bhansali, CEO of Ambit Asset Management. Sushant, it's great to have you with us. Welcome to Trade Talks.
Thank you and good morning to all of you.
Thank you. And tell us some more about Ambit.
Ambit is a financial services firm based out of India, and our business focus is Indian entrepreneurs. We have 5 business lines. The firm started as a boutique M&A advisory firm. And over the years, we have added a few more businesses like institutional broking, a wealth management business, and lending business, and an asset management business, which I run at Ambit. Between these 5 businesses, we have about more than 1,000 people, and our lending businesses has presence in more than 50 cities in the country. And our couple of our businesses do have offices in Singapore and New York as well.
Tell us more about the asset management industry in India. How competitive is it, and how does Ambit stand out from the crowd?
Sure. So the industry is as competitive as it can be, similar to how it is in US and other developed markets as well. Lots of asset management companies within each of the asset management fractions, be it real estate, be it mutual funds, be it private equity. I think there's immense competition. Ambit is present in a couple of segments. The segment which I run is into public equities. And the way we stand out within the whole competition is our focus on investing into good and clean companies. Our belief is in an emerging market like India, you need to buy growth, which is very expensive. And if you don't identify good businesses or clean businesses in a way, you'll not be able to create long-term value for your stakeholders. And this is how Ambit try to differentiate itself, is by investing and identifying those good and clean businesses.
Can you share with us what the investment landscape in India looks like? Why India?
Yeah, India is I would say, the place to be. If you ask me 20 years back, in every boardroom globally, it used to be, what is your China strategy? I would say that in the current circumstances, I think every boardroom globally has now wanting to have an India strategy. So India is important not just for strategic, but investors as well. We are seeing, as the firm has a great M&A practice, the traction which we are seeing from both global private equity firms as well as global corporations to invest and participate in the Indian growth journey is quite impressive. One way to look at it is that the way the Japanese economy grew between 60s and 90s, which was almost more than 70 times, right? Or the Chinese economy grew between 1990 and 2020. In those 30 years, China would have grown more than 40 times. We are expecting similar things to happen in India. And the next 3 decades, which is from 2020 to 2050, is somewhere where the demographic dividend is quite positive and will continue till about 2055. So that gives a great opportunity to grow. The country is, as such, a very highly consumption-oriented, self-dependent economy. So the vagaries of globalization does have some impact. The biggest amongst them is how crude prices behave, which is what impacts the Indian economy more than anything else globally. Otherwise, we have all the resources in line. So it becomes quite an attractive destination, not just for the domestic consumers, but as well as a base for global corporations to satisfy their global consumption needs. Be it IT services, where the Indian companies have made a great landmark in the last 30 odd years, or the pharma industry, or now increasingly the chemical industry, where India has become the global export hub for these commodities and agricultural based products, right? We are expecting similar things to happen in few other sectors over the period of time. Services can create jobs probably in the top 10, 20, 30 cities, but beyond that, it's manufacturing which creates jobs, as well as consumption and circulation of money within the economy, and which is where the government of the current regime has been focused. They have got lots of structural reforms in the past few years since the regime changed in 2014, right? Be it the demonetization, or be it GST getting into play, or be it how they have got public sector banks to function with much more autonomous functionality within each of them. I think the ripple effect of all of them coming together is that India is now perceived to be the next destination, both for strategic as well as public market investors.
From your perspective, what did the key players learn from the pandemic?
Pandemic, if you ask, I think the biggest learning and probably removing the mental block was to work as a hybrid culture, which so far I think everybody was attuned to come to office, and the hybrid culture is now sinking in each of the corporates. People now don't mind working from home or letting people work from home. So that's, I would say, the biggest learning from the pandemic. And alongside that is the need for digitization of each and every process within our own firm and our business. I think we have come a long way within the last 2 years since the pandemic and the lockdown started, where each and every function is now more or less automated and can be operated from anywhere in the world. That I think is the biggest. From a sentiment perspective, I think the other big change in as a human psychology, which we are observing nowadays, is how people are now wanting to spend more and live their life while they are. Right. So that's a big change, and people have also increasingly focused on savings. So both consumption and saving has taken a big boost in this pandemic period for most of the consumers, right? And corporates are wanting to make a big bet on both these themes in the country.
What's your collaboration with Nasdaq like, and how does Nasdaq contribute to your growth journey?
Yeah, so we've been working with the Nasdaq platform for about a year and a half, right? It's been able to help us reach out globally to a large set of investors. Traditionally, our business has been more local, right? And as we are trying to spread our wings globally, I think our partnership with Nasdaq has helped us both be present to global investors, as well as provide us a platform to be available for them as and when they need us.
And finally, Sushant, what's the outlook for Ambit? Say, for example, 5 years down the road, where do you see Ambit locally and regionally?
Sure. So as I told you, we have been more local so far, manage about $300 million of assets. 5 years back, it was not even $40 million. So we have come a long way. And our belief is that in the next 5 years, we might be able to manage more than $2 billion across not just equity, but a couple of other asset classes as well.
Okay. Sushant, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.